Good evening, everyone. Thank you so much for coming out, and welcome to our buyer seminar. For those of you who don't know me, my name is Bettina Reed. I have Kara Berman here, Rachel Halatsis, and I think everybody here just about knows Zach. So tonight we're just kind of give you a little bit of information on the benefits of home ownership, on the changes in the market and the strata bylaws and that sort of thing. And then we've got VyTri Truong from Everything Financial. He's going to give you some financing advice. And we have Phil Dadson from Garten, and you've changed the slide. Thank you. He's got some legal information that he can sort of provide to everybody regarding purchasing a home. And so we're going to start off with Rachel, because she started her purchase venture when she was really young at 19, and I think it's a great opportunity to kind of share you a bit of a story about how she got started.
Yay. Thank you, guys. So I'm Rachel, for those of you who don't know me, and I'm going to share my story of how I got into real estate at a young age. When I was 19, I was living with my mom in Walnut Grove in a townhouse, working full-time and paying very little in rent. My mom approached me and wanted to make a change from her townhouse, but couldn't do it on her own. She wanted to know if I was interested in buying a detached property with her. Looking back, the decision should have been obvious, but I knew that my lifestyle would have to change a lot, and the majority of my paychecks would be then going into a mortgage, and that wasn't an easy decision for me to make. In the end, I realized I had two choices. I could move out eventually, pay rent, and still have to save for a down payment to own one day, or I could jump on this opportunity and start my journey by sacrificing a large chunk of my paycheck. After many talks with my mom and other family members, I decided to go on this journey with her. We started to look at properties and quickly realized that what was available in the market and in our price range wasn't going to allow for me to have my own space like I initially thought. I originally thought I would have a basement or a suite to myself, but we still went forward with it and made it work for the next few years. About a year and a half into owning the house with my mom, a friend asked me to join her at a buyer's seminar with her cousin, which they were hosting at the Cloverdale Rec Center. Her cousin was a mortgage broker, and she had a realtor friend join her. We went to the seminar, and I learned more about the buying process and what it would take for me to buy a place on my own after selling the house with my mom. A few months had passed, and I kept thinking about how nice it would be to have my own space. I went to my mom and asked her what her plan was for the house. To my surprise, she was open to having an evaluation done to see if it made sense for us to sell. I called up the agent I had met at the seminar to come give us an evaluation. Luckily, it made sense for us to sell, even though we had only been there for 2 years. I was able to use the equity I made from selling the house with my mom to buy a condo with only myself on title. For the first bit of owning my condo, it wasn't easy to watch my friends going on vacations and buying what seemed like all the things while I was putting my money into a mortgage. But over time, I did get used to it and was still able to save up for extras here and there. In the end, those harder financial times in my 20s were worth it for me to gain the equity I did between the two properties and be where I am today. We sold the condo last year and are now in a detached house that I bought with my fiance. All in all, it did take about 14 years to go from initial investment to detached property, but again, for me, it was very worth the wait and the money spent. Thank you for listening.
So, my job is to talk about the benefits of being a homeowner. And in our opinion, there is definitely quite a few benefits. The main thing that I like to talk to people about is how our market is a market that tends to trend up, right? There are going to be ups and downs, but at the end of the day, our market tends to be good for you if you stay in it. So there's a term where it's time in the market, not timing the market. So it doesn't matter what time you get into the market. It really doesn't. At the end of the day, just getting into the market is the most important part. So if you get into it at a peak where the interest rates are low, that's fine. If you get into it when the prices have dropped, like they have right now, 19.6%, you're still gonna be fine, because over the last couple of years, we're up 37%. And over the last 10 years, we're up 117% just in the Fraser Valley. So I know some people here might not look in the Fraser Valley alone, but the Vancouver markets are very similar to ours. If anything, the value's probably gone up a little bit there too. So just some interesting numbers. I'm sure you can see the area that you live in, and you can see all the different percentage changes. And it's interesting to look at when you see that we're up 117% over 10 years. And so if you were to get into the market 10 years ago, your investment's done pretty well.
Having talked with a lot of clients, they're always nervous because last year or 2 years ago, it was like, I should have bought then, right? So today goes on, well, I should have bought then. So we always want to tell clients that you may look like you're overpriced compared to yesterday, but 15 years from now, looking back, you're going to be glad you made that decision because you're well underpriced compared to 15 years from now.
Totally. And when I started in real estate about 4 years ago now, I met with a pretty experienced agent in the White Rock office here, and he's like, when you meet with people, you tell them the best day to get in is tomorrow or even today, because it doesn't really matter what the market looks like. You're going to buy what the current market value is, and then eventually that value is going to go up and down. But if you're just following that wave and you stick with it for 5 years, 6 years, doesn't matter, it's probably going to do pretty well. Another thing that we use as a team quite often is something called the HPI, which is the Home Price Index. And this is the Home Price Index starting in 2005. And I mean, you can see there's some ups and downs. There was a huge up in 2021, 2022. But even then, that came down a little bit, and we're still kind of on that steady trend going up. So something you really want to pay attention to is investing in yourself. And it's hard to invest in yourself when you're paying rent or all of your money is going into that rent. Now, that being said, I rented for 1.5 years, and I get it. It's not the easiest market to live in and to afford something. But at the end of the day, you just got to find the right setup where you can save up and rent at the same time and just be smart with your money. The nice thing about getting into this market is you can enjoy living in the Lower Mainland and you can enjoy the rise of pricing as opposed to being upset every time you hear on the news prices have gone up a certain percentage. You can see that as a good thing instead of a bad thing. So that's kind of nice. And one last thing I want to touch on is if your parents have a home, if they've bought something and they've been in it for a long time, just ask them if they think they're happy that they bought. And I'm pretty sure you're going to know the answer. So that's all from me.
So I'm Kara again. Bettina was so kind to introduce me. And a few of the things that I'm going to touch on are using a realtor to purchase or just having representation or agency in the industry. So I'm not sure if you've all heard, but some things changed in the last 5 years in regards to representation and agency. Dual agency doesn't really exist anymore. Kinda. You can still purchase from the same agent that is representing the seller, but essentially you'd be unrepresented. So that's a whole long story, but essentially as a purchaser, you would want to have some sort of agency relationship if you can, for two reasons. It helps mitigate any liabilities when you're going to purchase, but it also helps you avoid potential future issues that you wouldn't necessarily know to look for by not having representation. So things like making sure you're doing an inspection or things that might be sitting on title. So there's like a laundry list of things that you may want to consider or that you wouldn't necessarily consider if you didn't have an agent. And the best part about that is that typically the seller pays the commission for the buy agent. So it's at no cost to you. It sort of gives you the opportunity to move forward in a purchase and have confidence knowing that not only are they writing up a legally binding contract, but they're also vetting the property with you as you move along. Also working on your behalf. Negotiating is the biggest part, or one of the biggest parts of our job. I mean, us having the ability to get you the best price is huge. You can, if you feel confident doing that on your own, great. But that being said, statistically, working with an agent, you will do better both as a sell and or as a buy. Ways into the market. I know that VyTri is going to touch on some stuff on how to tap into equity or savings or some of the new programs that the government has kind of rolled out in order to be able to get into the market. As a young adult, I'm not one anymore, but as a young adult, we hear from them and they say, they feel like it's never going to happen. I'm sure you guys have sort of felt that way at some point or another, because it constantly feels like you're 2 steps behind. That being said, thankfully, some of us have access either through parents, family, or getting together with friends and doing a purchase that would allow you to treat it as a business transaction or an investment. But like I said, VyTri will touch on options to tap into some of those things. One of the other things too is there's a misconception, I think, about having to jump straight to a detached property in the neighborhood that you grew up in, or in the preferred area that you want to be in. Like, oh, I've got to live downtown. Sometimes the stepping stone is outside of the preferred area. So for example, not that anybody wants to venture all the way out to Chilliwack, but there's investment opportunities outside of the areas that you're thinking of. You could even, depending on where you're going, again, there's reasons why you use a realtor to help guide you, but there are areas where you can avoid vacancy tax or do an Airbnb that doesn't penalize you in a stratified property. So there are tons of options that people sometimes overlook, and there's lots of opportunity. And working with an agent or having somebody provide you with those kind of tidbits or tricks is huge, and that will help get your foot in the door, and like a fraction of the cost. Like the difference between purchasing in Vancouver versus purchasing up in, Karameas is significant, right? Yeah, so a few of the changes that we're seeing some benefits to the consumer is the rescission period is one in terms of consumer protection. It removes a little bit of the risk in putting forward an offer in a fast-paced market. We're not really there right now. We can sort of use subjects to protect us, but everybody is owed 3 days to rescind an offer. So basically, you get your buyer beware. If we were in a crazy market and you put forward an offer like subject-free, you would be able to get out of it for a very nominal fee and kind of move on. We're talking depending on the cost or the price, it's usually 0.025% of a purchase price. Nothing you need to worry about, but basically you have safety in knowing that you could collapse the deal for a cost without stressing out about your $50,000 deposit or $10,000 deposit for that matter. The rentals are a big one. So the biggest one that's tied to this in terms of an investment or a purchase for future investment is almost all strata properties, actually all strata properties with the caveat of like Airbnbs, allow rentals. It's good and bad, but mostly good, because as a purchaser, it gives you flexibility if you had to rent it out. If something were to come up and you needed to cover that mortgage off, you could have somebody else paying for it and kind of sneak back to mom and dad, which isn't ideal, but it gives you some sense of safety knowing I could rent this without having to beg strata for hardship. One of the other things too is age restrictions. With the exception of 55 plus, any building that doesn't have 55 plus no longer can apply an age restriction. So basically, if there was a building that you love, but you're like, oh, I'm not 45, I can't be in there, you can. It opened up not only for our housing crisis to allow people to rent out, but it allowed young people to acquire properties in buildings that maybe had a lower price point that they were kind of shut off from. So now, unless it's 55 plus, age restrictions no longer apply. There's a myth that we were in a market where you had to write a subject-free offer. It did feel that way because most of the people were in panic mode and writing subject-free offers. That is no longer the case because we're all running off of a level playing field with that initial 3-day window. That being said, we are still seeing them, but there's no pressure. You don't have to. There will eventually, it should swing to more inventory where we're not fighting for these things, but at minimum, you're gonna get 3 days to do due diligence. And that helps to compete. I've already covered off the commission side of it. The sellers traditionally or typically will pay the cost, and that comes from the proceeds of the sale. So we take all the risk in doing the heavy lifting, and we only get paid once that deal has completed.
This, I'm just going to be brief. This is just kind of giving you an idea and a flow of how the process works. And so initially, the first person you should speak to is somebody like VyTri or VyTri himself, because he can give you guidance on what you could afford, what you can look at. The last thing you want to do is start looking at properties that you can afford and get your heart set on something. Make sure you know before you go to exactly what it is that you can afford. And then you start talking to a realtor, talking to us about what your needs are, what you want, and we sort of narrow that down. And you start looking at properties and you kind of go through that whole, how much do you offer? We do a CMA, we look at what the market analysis is for that neighborhood and that area, and we kind of take you whole the buyer process. And then you go right through to making an offer and right towards the, once you get an accepted offer, what is the process? And so we guide you through all of this right until key day. Okay. So I will hand it over now to VyTri.
Oh, everyone, it's VyTri. I know it looks like VyTri, but VyTri like victory. I am a mortgage broker. I'm also a financial advisor. My office is literally right behind this wall. Everything financial, like right there. So the way I look at things a little bit differently, because I'm also an advisor, we're not looking just to get you in and never see you again. I need to look you in the eye for probably the next 30, 40, 50 years, help you make good decisions all along the way, and help you figure out how this home purchase is going to fit in your plan. As an advisor, people with homes, much easier to plan for retirement than people without homes. It's just a lot harder because when you have the home, you've got another asset working for you, right? I'm also an author. That's me and my wife. We've been just in Mexico last week on a staff retreat, and I have 4 kids. So I've got a slide here prepared, lots of information on it. I figured we would just kind of talk about what's important to you because I don't want to cover irrelevant stuff. Probably 3 topics. How much can I get? What affects my qualification? And how do I save? How do I get this money and how do I get started? So first, like Bettina was talking about, get your pre-approvals, know how much you're qualified for. There's a pre-approval, then there's a rate hold. The two are different. So if you've ever seen those commercials where RBC is like, I got approved in 30 seconds, that's not a pre-approval, that's a rate hold because they didn't look at any documents, right? The devil is in the details. You have to look at all the documents that you have for your income, your down payment, or your gift. Make sure all of that is up to snuff. Point out any pitfalls. You might not think that new car loan affects you, but boy, does it ever. Stuff like that we would talk about and determine like a maximum purchase price for you. Then how much down payment you have determines how much you can afford as well, because in 2016, the government did this thing where they decided a lot of things were no longer going to be insured. So all of the mortgage rates and lending rules kind of changed in 2016, so it's a lot more complicated. What I would do first, I would definitely talk to these guys. These are my personal realtors. We bought a couple times with them. I sent a couple of clients, and they rave because Kara holds the client's hand through the process, like you are their advocate, right? There's pitfalls that they don't know anything about and you're pointing them out. So definitely, love working with you guys. Anyone self-employed? All right. Have you heard that you have to declare more income? Like, have you run into any pitfalls with this? First year self-employed. Awesome. So first year self-employed, if you're looking to buy this year, you got to go under $1 million. There's an insured program for people who between 6 months and 2 years in business. And what they do is they actually look at your bank statements. So because you can't prove any income because you just started, they look at how much cash flow is going through your business and they'll project that. So I have a mortgage application that you can, it's a phone app, Android, iOS. One of my last slides, I'll have a QR code that you can go and scan that if you want. And then it just goes on here. You kind of punch in like, here's my income, here's what I got for down payment, here's what I think my credit score is, and it'll spit out a pre-approval. It'll spit out, here's what you can qualify for, here's what the payment is. So as you're shopping with Kara, you can go, okay, well, how much is that going to cost me every month? And it'll kind of give you a really rough idea of what that would be to see is that something you're comfortable with. Okay, so what affects qualification? This is a biggie. Every payment that you have affects how much you can get. For every $100 a month of payments, you reduce your qualification by $25,000. So you have a $400 payment, you've lost $100,000 in mortgage qualification. So if you have a car loan, that could really bring that down. Right, so we have to find ways to get rid of it, maybe move it to a family member, sell the car. Student loans count, lines of credit, things like that really affect your score. Other debts, so anyone here who has co-signed for someone on their house? No? Awesome. If you did, you also owe that entire mortgage. You're responsible for that entire thing. So, however much you own of it, say half the house, half that payment goes against you. So for any parents who are looking to co-sign with their kids, maybe don't. Like if we can do like a gift or something, that would be better. I try everything except for co-signing or guaranteeing, right? That's kind of the last step. Also, if you're on the title as a parent and that's not where you live, and when your kid sells the place, you're going to be hit with capital gains because that's an investment property. So a bit of a pitfall to watch out for. We'll skip qualifying rates because that's getting into the weeds. Saving for my home, how much down payment? I think we talked about that. There is a new first-time home buyer savings account. So the government just introduced this. You've heard on the news, April 1st it went live. What it is, it's like an RSP. So you get the RSP-like deduction. You can do $8,000 a year. That comes off your income, and you don't have to pay it back. So you can save up to $40,000 over your lifetime. Just have the savings account and put that towards your down payment, and you don't have to pay it back. Has anyone heard of the RSP, like use your RSPs for down payment? Do not do that. So the maximum RSP that you can do is $35,000. So if you put save the way in your RSP, and then you take $35,000 out and use that for your down payment, the catch is you have to repay it. You have 15 years to repay it. So $35,000 over 15 years is $200 a month. So you're already stretched, right, with your payment because first home, and now a year after, you have to add another $200 payment. Don't do it. It's not really good. And if you're a first-time home buyer, chances are you're probably not in a high enough tax bracket to really warrant buying an RSP. And unless you're making over $100,000, do not contribute to an RSP. You're probably better off contributing to a TFSA. Or, first-time home buyer, first home savings account that hopefully this summer, all the banks will have. Pitfalls, using RSP, just talked about that. Major purchases, do not, so as we're looking to buy a home, a lot of us feel wealthy, right? We're like, I got some money now, like I'm gonna buy a house, no, I'm gonna buy that, I'm gonna buy that. Oh, this furniture place means $20,000 in furniture, but they let me put it on a credit card, and I don't have to pay for 12 months. Well, that counts against you, right? Because the lenders look at that and they go, well, what is that in a payment if you were to pay it? And then as we talked about, $100 per month payment reduces your qualification. So don't make any major purchases while you're shopping for a home. In fact, if you have lots of money in all of your various accounts and that's all down payment, like 5-6 accounts, do not move your money. Don't make it easy for the bank to have it all in one place because each of those things, we need a 90-day history. And if you start moving things around, now as a lender, we have to connect the dots. Right? This money moved over here on this date, so we have to look at both transactions. And then over here, just leave it where it is. It's probably easier to get 6 90-day statements than moving it all together, and now we have to convince everyone that you're not money laundering. Do not change jobs before you buy a home. Lenders love stability. So, if you get a raise or a promotion, that's fine. You're in the same industry. But if you were a plumber and now you're in nursing, that's two completely different things. They're going to want to see a longer history before they believe your income is sustainable. So if you got really mad at work, like don't quit until after you've signed on the dotted line, right? Nothing's final until you have the lawyer with the pen in your hand. And then once you've done all that, you're thinking, man, it's gonna be 30 years before I pay off my mortgage. Don't sweat it. In fact, my advice to most clients, don't pay off your mortgage. Never pay that sucker off. I know it's weird to say. Because mortgage rates typically are in a 4 to 5% range, sometimes better. If you make extra payments, try to pay that off faster, you're buying an investment of 4 and 5%. Whereas your money, that extra money is better off in something like a TFSA that's invested in the market where you can earn 6, 7, sometimes more, right? So by building up side pot of cash, that side pot of cash will grow a lot faster than you trying to pay down this mortgage, right? And it also provides like just in case money, like, you know, life throws you a curveball and most times you need a pile of money to fix it. Well, if you pay down your mortgage, it's gonna cost you a lot of money, fees, penalties to take that back out to fix life. You would make the mortgage broker more money, right? But it would cost you a lot more. Save it in the side, and then you're not gonna end up in a situation where, you know, you've paid off your mortgage, but you can't eat the four walls of your house in retirement. So we don't want you to be in that position. We want to increase your net worth by having kind of well-diversified financial outlook, really. Yeah, so yeah, I'm VyTri. I work next door. Come in for some questions. We can grab a coffee here.
So for those who don't know me, I'm Phil. And I guess it's good that I go last because after they've talked you into buying a place and he's financed it for you, then it comes to the lawyer to put it all together. And so I just thought I'd run through what we do, sort of how we do it and what we do. So first of all, we bring all the different people together. You've got the seller, you've got the mortgage company, you've got, if you're buying a strata, you got the strata corporation, and of course you've got yourself. So the first things we do is we'll prepare the transfers and we send that to the seller's lawyer, and that's a pretty straightforward document. One thing to consider on that is how you're going to be shown on title. When there's 2 or more people on title, there's 2 ways of doing it, either as a joint tenant or a tenant in common. And the only difference is what happens if one of them dies. So if it's joint tenancy and one of the owners dies, then the survivor becomes the automatic owner of the property. If it's tenancy in common, then if one dies, it remains in their estate, which generally is not a good thing. That would cause a lot of complications, especially for first-time buyers. So you want to make sure it's joint tenancy. And then we also deal with the bank. And so you've dealt with the loans officers, got your approvals. We deal with the back office, if you will, of the institution. They send us the mortgage instructions. So we are responsible for preparing the mortgage, arranging funds from the bank, and making sure their conditions are met. So they'll have a number of conditions for financing. They want to make sure the taxes are paid, which we do, make sure the taxes are paid. They want to make sure the property is insured. And on insurance, if you're buying a strata property, then the fire insurance, the building insurance is in place by the strata. And that's all part of your strata fees. But you also want to make sure that you have your own insurance for contents and more particularly liability. Because, for example, if you were to go away for a weekend, leave the water running, sink overflows, goes down to the unit down below, then you're on the hook for that. So you need insurance for that. We also would deal with the strata, so we get certain forms from the strata. We get confirmed that there's no strata fees owing, that there's no special assessments coming up. And then we gather all that together, and then we get ready to see you, or the purchaser, and we prepare what's called a statement of adjustments. And the statement of adjustments is where you will see all your, and I saw there was a reference here somewhere to closing costs. So closing costs are what you're going to be paying over and above the purchase price. And some of them are kind of significant. First of all, there's property transfer tax. So that's 1% of the first 200,000, 2% of anything over. If you're a first-time buyer, there is an exemption available, but it's kind of restricted. It's only available if the property, well, basically only available if the property is under $500,000. You can't have owned a home anywhere else before, and you have to live in the home for at least a year. So if you're taking advantage of that program, one thing you want to make sure you do is update all of your address on your driver's license, your bank statements, and those, because the government will come knocking a year down the road and say, prove to us that you've been living there for a year. And if you can't prove it, then they'll want the property transfer tax, and they'll want a penalty. Okay? Other things on the statement of adjustments that sometimes fool people, aren't anticipated, I should say, is your bank may want title insurance. So that will usually be several $100s to get title insurance. That just, that's come about lately because there's been lots of discussion about fraudulent transfers, things like that. That's not really a problem in BC so much. We have a different land title system than they have in Ontario, but the bank's got a policy and the bank's got the policy, so you got to get title insurance. There's also be a tax adjustment. So property taxes are billed in July, but they're for the calendar year. So when you are buying, say you're buying in August, well then the seller, he's responsible for the taxes up until August, but he will have already paid them for the full year. So you have to add that onto the statement of adjustments, and that can be a fairly big number at times, and that's a bit of a surprise. Other than that, there's costs of getting insurance binders, there's costs, there's couriers involved, there's cost of doing the registration with Land Title Office, and a number of costs like that. And then of course there's lawyers or notary costs. Through the roof. And they're actually not through the roof, but there is actually quite a bit of work to do, and a lot of people are concerned and want quotes. Generally, I would budget $2,000 for that, but that will include a lot of those disbursements I talked about. That would include your title insurance. There's a different law firms and notaries handle things differently. And some will put costs onto the statement of adjustments, and some will pay those costs and add it to their bill. So sometimes one bill for $1,500 legal costs, you're actually paying, and somebody else was charging $1,000, you're actually paying more to the other person because there was more on the statement of adjustments. What I find is pretty much the industry is there may be a difference of a couple $100. Where you go, it's not going to be big. Anything else? No? Good.